Hi guys, Brian Rogers here. I'm going to do a video on the SBA and SBA loans. If you're looking for information, I can certainly help you out. There's two programs that the SBA has. One of them is the 7A program. And the 7A program is a program that's good for these particular uses right here. You can provide long-term working capital to pay operational expenses, accounts payable, and a purchase inventory. I would say 7A, this is the most popular use for that particular program. Short-term working capital needs, seasonal financing, contract performance, construction financing, exporting, revolving funds based on the value of existing inventory and receivables under special conditions. Sometimes that's called asset-based lending. You can use a 7A program to purchase equipment, machinery, furniture, fixtures, supplies, materials. You can even purchase real estate with the 7A loan, and that also includes land and buildings. And I do like the 7A program when you purchase real estate for one reason in particular, is that you can go up to 25 years amortization with a 7A note. So that really does help out the cash flow, especially if you are relatively new or just getting going. That really is a great help with your cash flow. That additional 5 years. That typical when you think about real estate, especially commercial, when you're dealing with the bank, you're not going to find anything over 20 years. But that SBA 25 year, that's a pretty big deal in my opinion. So you can also use it to establish new business or assist in the acquisition, operation, or expansion of an existing business and to refinance existing business debt under certain conditions. That's something you want to talk to your banker about because that part is a little tricky. But those are all good uses of the 7A. And once again, I'm not sure if I clarified this at the beginning of the video, but there's two primary products that the SBA has. It's the 7A, and then there is the 504. How the 7A works, though, is the SBA is going to actually provide a bank, let's just say a 75% guarantee. That's typically, sometimes the SBA will play with that number depending on what the economy is doing and what the level is, but the main umbrella of this 7A program is 75% guaranteed from the SBA. I just want to double check that because it's either 75 or 85% amortization collateral. Anyway, let's just say 75%. And to be eligible for this particular program, you need to be operating for profit. You need to be a small business defined by the SBA, and that's usually by how many employees you have and how much revenue you generate. Be able to demonstrate a need for the loan proceeds. That's quite obvious. Use the funds for a sound business purpose and not be delinquent on any existing debt obligations to the U.S. government. So those are the general eligibility for the particular programs. Now, under the 7A umbrella, there are micro loan programs as well. And these kind of change around a little bit. So you'd want to talk to your local banker about that. But the 7A also has, under its umbrella, they have a veterans program. They have something called the SBA Express, which is a pretty quick process. It only provides a 50% guarantee, so it's not as good as the regular 7A program, and the Express will only go up to a certain dollar amount. So that's how that program works. If you have any questions on the 7A, definitely feel free to leave a comment or reply, and I'll get back to you on that. But aside of the 7A program, you also have the 504, which the 504 is typically used for commercial real estate. And how the 504 program works is if you're looking to buy a building, let's just say $1 million for this video, and once you go to your bank and you're going to apply for the 504 loan, the bank is going to get a CDC involved, and the CDC is called a Certified Development Company, and they're all over the country. What a CDC does is they act primarily, they act as the middleman between the SBA and the bank. So if you're looking to buy $1 million building, what you'd come in and you would run the application as normal. The bank, how it would be structured is the bank would take 50% of the purchase price or the value of the building, whichever is less. Typically, it's the purchase price. And so the bank would come in and finance 50% of that. So the bank would be at a 50% loan of value or less with this particular project. So they'd finance $500,000 of it. Depending on the building, the SBA itself or the CDC is going to come in and finance anywhere between 35 to 40% of the project. And there's a couple of factors that determine what your down payment is going to be. One, are you a new business? Two, how specialized is the building itself? Depending on those two variables, you might need to bring 15% down as opposed to 10%. So the bank will finance 50% of the project. The SBA, depending on, once again, the building itself, and or if you're a brand new building or a business, will finance 35 to 40%, and then you're going to come in and finance the 10 to 15%. Now that 10 to 15% that you need to have equity can come in various forms. They can come into cash out of your own pocket, obviously. So if you have the down payment cash, it's always a good way to do it. You can, if you already own, like let's say you own the land, but you want to build a building there, you can do that with the 504 deal. The land value can actually be your equity portion as well, so that's another good option. 3, there's something called a seller carryback note, which, and it's common in commercial real estate transactions where the seller, him or herself, or whatever business entity it might be, the seller itself would be willing to take a separate note behind the bank and behind the SBA that you could pay, and then that note would be the equity into that actual project for that real estate purchase. So that is how the 504 program works. But in summary, the Small Business Administration / SBA is there for small businesses. They help you get loans in a way that they mitigate risk to a bank. The SBA mitigates risk by, the SBA 7A mitigates risk by guaranteeing a certain portion of the loan. So the SBA doesn't give any financing. The bank does all the financing for the 7A loan. All the SBA does is guarantee to a certain percentage, let's just say 75%. So what that means is if you borrow $1 million and 1 year down the road you default and you can't pay back your loan, then the bank will do whatever it can do to liquidate the business and pay back its loan. So if the bank can't get the full $1 million back, it will get as much as it can, and then the SBA will come in and cover 75% of whatever's left over. So regardless, there's always a little bit of risk that the bank has, but still the 7A program is very good. Once again, that's good for startups, existing businesses, businesses that need to purchase real estate, businesses that need working capital. So that's the 7A. Now the 504, in summary, what they do, once again, bank, there is a separate note. You're going to have one note with the bank. You're going to have one note with the CDC. The bank's going to finance 50% of it. The CD is going to finance 35 to 40% of the purchase price. And you're coming in with a down payment at 10 to 15%. That down payment, once again, can come in the form of cash, can come in the form of equity if you already own the land, and can come in the form of a seller carryback note. I hope this information helps you. If by chance you are researching SBA loans because you are looking to start a business, I do a pretty good side business online, and if you ever thought about it, if you haven't thought about it, it might be something to think about. It's a great way to earn passive income. If you click the link below, livemarketingproject.net, watch a video that Jeff Buchanan created. He created this whole marketing system that I use, and it's completely free, and you can get started. You have the whole system, you have all the free training, and if you did want to get started in a program like that, I would be your personal mentor as well to help you get up and running. But I use that passive income that I get from that business to help finance some of these videos that I do. But check out the link below, and if you have any questions on the SBA, or if you have any questions on the link below, send me a comment, reply, give me a call. Anyway, I'll talk to you later, guys. Thank you, Brian Rogers.